one particular segment that is doing very well is actually the new age consumer players like Honasa, Nykaa. They are soaring in trade today post their Q1 earnings. And my colleague Snehi joins in to help us understand what worked for them and what the brokerages are penciling in now. Snehi, over to you.
Well, absolutely. Two stocks that are up in a way, Nykaa as well as Honasa Consumers on the back of its Q1 earnings. Both of them very good set of numbers coming in. Let's take it one by one. Understand first what worked for both of them individually. Nykaa revenue, EBITDA and margin in line with our estimate. The overall GMV came in at 4,182 crores, which is up 26% year on year, in line with our estimates. What really pushed the stock to do well this time around in Q1 was the BPC revenue. That was up 24%. We were expecting an 18% growth, so beat on that front. Fashion GMV also up 24.5%. We were expecting a 20% growth, so big beat on that front as well. While we're talking about the fashion segment, the fashion net losses have reduced on a year-on-year basis to 27 crores from 30.3 crores last year. So these were all the factors, the top factors among other positives that worked for Nykaa this time around. Let's shift tail and talk about Honasa consumer revenue in line. PAT EBITDA margin beat versus our estimates. EBITDA margin expansion has been healthy. Focus categories like face wash, shampoo, serums, they've seen double-digit year-on-year growth. There's been 100% year-on-year growth in face cleansers, and this is the third category to reach an ARR of 100 crore plus. The revamp in the general trade strategy, remember that they did last year, has reaped into results. Modern trade and offline retail distribution are both up 20%. Direct distribution strategy is up 50% year on year, and that has driven a 50% increase in retail outlets built in Q1. Now let's come to the guidance front. For Nykaa, they are on track for their fashion EBITDA margin break even in FY26 this financial year itself. They also say that beauty vertical has room for more profitability, and they see opportunity in health and wellness supplements, and hence the acquisition of Nudge Wellness. For Honasa, they expect double-digit value growth for the remainder of FY26, EBITDA to be maintained between 7 and 8%, and they expect larger brands to reach the mid-teen EBITDA margin by 4 to 5 years. Lastly, what the brokerages are making on both of these stocks: for Nykaa, Jefferies maintains a buy, Citi maintains a sell, Axis Capital and Nuvama have all maintained buy. But barring Nuvama, all of these other brokerages have hiked the target prices as well. As is the case for CLSA, for Honasa, wherein CLSA in fact has upgraded the stock to an accumulate from hold, hiked the target price. Jefferies continues to be positive. Goldman Sachs has maintained neutral. JP Morgan has maintained underweight. But even both of these brokerages have hiked the target prices nominally. So that's the take on the Q1 of both Nykaa as well as Honasa, and what has gone right for both of them this time around.
We would rather play companies where sustainably on a longer term basis, apart from the cyclical second half seasonal uptick, you will see continued sustainable growth in the years ahead. And that usually is these consumer tech companies like some of the ones you mentioned, where they're gaining market share, they're pulling further away from some of the weaker competitors in this slow economic environment. So again, what we are saying is look for category leaders, even within the consumer sector. Look at these consumer tech companies, which are category leaders. Some of the names you mentioned, Nykaa, Honasa, etc. They are pulling further away from some of the weaker competitors. But again, the next 1 or 2 quarters are still going to be somewhat tough. Valuations are elevated. So don't expect any dramatic returns from their stocks in the near term. But on a 3 to 5 year basis, if you're willing to wait that long, these are the stocks we would like.
All right, so that's the take coming in from Prateek Gupta, that you have to be really selective within this particular pack as well. But Narendra, a lot of excitement on the stock prices as well. But what do you make out of it? And any of the stocks that is still looking good to you, where one can really look for a fresh addition at these levels?
Yeah, first of all, both those stocks are not under half coverage, but yeah, definitely the results and the guidance has really given thumbs up. The market has really given thumbs up for the stocks. And since the consumer space was not performing well throughout the year, and with just the festive season is starting around the corner, so I think this is much needed respite in terms of the consumption space. And if you see, gradually, the consumer space in these segments are also consolidating, although on a very slow pace. But we are seeing consolidation into the large players, and the unorganized segment is getting out of the competition, and gradually these kind of players would definitely be benefit for the medium to long term. So definitely, it's a place to be in for the long haul.